Welcome, Auvorians. Today is September 29th. My name is Steve Vetterl. I am the dude on the mic as your risk manager. Hope everybody is well. If we could do a please in the chat window. Um, Let me know if you guys can see my screen, hear me okay. Go ahead and get started. Got a short session today. Not really a lot going on in this country. We have presidential debates tonight. We have a bunch of hearings on the Hill about a bailout package. I think the markets are somewhat in holding pattern, maybe for some of the things to come out. A little bit of a reversal on the dollar. So welcome all. Spread the word if you would, please. We have a big launch coming up October 17th for Variable and phase 2 of Auvoria Prime. It's going to be a big deal. We've been preparing a lot. Finally got my videos done. I was a knucklehead. I sat in front of the camera. You guys look at see my ugly face, talk about demoing and all kinds of things related to the psychology of trading. So as your risk manager, I try and just keep on alert. Look out for things that can maybe come in and steamroll your account. So let's talk a little bit about the risk disclosure. So trading the foreign exchange market carries high risk, may not be able to suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk to lead to complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software or products, you should carefully and diligently consider your personal investment objectives, levels of experience, and risk tolerance. There's a possibility that potentially sustain significant loss. So please do yourself a favor. Make sure you're not trading with money that you cannot afford to lose. I can't stress that more. And then secondly, we'll educate you on getting the psychology. But second part of the risk disclosure, if you guys are sharing any of the settings out there, and do keep in mind, I've had the luxury of dealing directly recently with some commodity futures attorneys in this country from the CFTC. Attorneys used to serve on the commission. Actually, I had with a nice gentleman the other day. They love when you guys share results that are verified. So they basically rubber stamped, for lack of a better discussion I had the other day, the MyFX book. So please make sure you hook your accounts up to MyFX book. Make sure they're double verified. Make sure you put the very distinct disclaimer in before you post any of these results. For gosh sakes, do not call them company recommended settings. Okay. So we're not recommending settings. We're not a financial advisory firm. We license the software. You guys can use it at your own risk and discretion. Some software does come with default settings, but you guys have the ability to customize. So we really have nothing to do with your brokerage account. We don't recommend brokers. We don't manage money for you. We don't do anything related to any of that stuff. We just sell education and license software. Okay. So let's take a quick jump over to Forex Factory Calendar, which I typically move to next, into a mini discussion of what's going on. So a fairly fraught with risk week, in my opinion, in terms of ECB and or non-farm payroll, which essentially is just nothing more than a fancy term for the jobs numbers in the US on Friday. And so I typically do not trade jobs numbers. They'll usually come out at 8:30 a.m. Eastern time. He usually creates some melees for a little bit. Maybe a couple hours after that, I'll take a look if I'm going to be trading equities or futures or Forex that day manually, but I usually wait for a couple hours. So that being said, China holiday this week, I think that's led to a little less craziness in currency markets because the Bank of China essentially is closed. So they can't be out there as a disruptor in the markets. That's the calendar. That's all I really want to say on it. Let's jump over to the markets. Dollar, a little bit of reversal action, right? So we had, I don't know, maybe a bit of a short barbecue as we've rallied above this point, but dollar's back down now and essentially resting on what possibly could be support. If it breaks through this, what that usually tells you in technical analysis land, if it breaks through this support, it's probably going to break through the one on the bottom. How long, when? I don't know. So usually what I try and do from a strategic standpoint, and keep in mind, as maybe some of you, this is beginning to sound like a broken record, but we have a lot of new subscribers that have joined the organization. So please make sure you're letting everybody know my Telegram channel. I post a lot of stuff there. I've also started posting on the Telegram channel to my weekly economic emails that go out to all my clients. So I have an automated email that goes out to each client's typically on Monday morning, giving them just a generic overview of what's going on in stock land, commodities, things like that, banking system, Federal Reserve, kind of giving them an overview of what's going on with the dollar, so forth. So if you want to see that, I started posting that on the Telegram channel. All right, so what else do I want to say on the dollar? So stay tuned essentially on this one. So again, the technical analysis, which I'm just going to touch on briefly this morning, talked a lot about this. For those of you that have not tuned in, do keep in mind on the 12th, if I'm not mistaken, of September, is when David Mays introduced, we'll just call them the David settings, right? He introduced the settings. This is a good discussion. They're different. They're for Einstein and Alexander. You can go back and listen to that recording. It's in the back office on your dashboard. Just choose your product. It'll go to the resources and actually see all the recordings on our Vimeo channel for the corporate. What else do I want to say on this? That's it. Let's take a look at GBP USD. So as I'd mentioned on Saturday, we had a couple of doji show up late last week. These are indecision candles, typically where you have a long wick on either side of this. This is tough to see. I'll make the screen expand, but essentially doji is right on a big support line. This is the 200 MA right here. Plus it's also support. And there's a number of confluencing events inside here. And no surprise, we bounced off of that. Euro USD, again, as the reversal of the dollar goes lower, right? Thus, now we're back inside of that range that we've been bouncing in for some time. We peaked our head below it, but I didn't think that the weakness of the, or I should say the strength of the dollar, which was fairly short-lived. Here's a dollar chart again. I didn't think the strength of this was going to hold that long. I figured we'd probably fall back inside the range. Typically, if you've poked ahead above a particular range for a period of time, in this case, 3 days, arguably 3.5, 4 days, you get back down inside the range, more than likely you're going to go completely across the other side and crash through the bottom. Not always. Could be wrong, but it's typically what happens statistically. So Euro, here's USD JPY. Do keep in mind, guys, this is going to be a fairly short call, so I'm sort of tearing through stuff. If you have any questions, ask them now. Or otherwise, we're going to end this quick. What else do I want to mention about this? So if you haven't been tuning into my calls, in my opinion, the US dollar has really been leading around most stuff. Typically you'll find that whether it be commodity markets, currencies, futures markets, versus really just an extension of commodities and equities, right? Or actual equity markets are typically have a front runner that's leading things around, right? Sometimes it'll be tech, which seems to be the case the last 10 years, right? In equity land, that's leading the markets around. Sometimes it's oil, sometimes it's the dollar. Typically, when you have big changes, as we've had during a global pandemic, where we've had lots of crazy volatility in terms of the currency markets, central banks doing all kinds of stuff like getting their countries in big debt, devalues the currency, makes it go down. So we're seeing a lot of that right now. And, if you're looking at the long term, or even if you look at a weekly chart on the US dollar, or even move to a monthly chart, which is the longest term we can go, I can actually stretch this thing all the way back to like a long time ago. And then as you could see, the dollar in the past, especially during big periods of weakness, has been much, much stronger than it has now. We also have a lot more debt as a country. So from a grand scheme of things, since like in 1986, shouldn't surprise you that the dollar is lower by about 30%. you think, well, all the debt we've taken on, the dollar would be much lower, right? But in currency land right now, it's always the better of all evils, right? So the dollar, as seen, even though we have a debt level in this country that is approaching, um, not approaching, it is far surpassed um, comprehension levels. Let's just say that, or levels of comprehension. um, the currency is still seen as somewhat of a safe haven. Plus the fact that China and a lot of other countries' sovereign wealth funds have tremendous amounts of our debt, essentially owning our bonds, treasuries, everything from a 2 to a 30-year bond. So all has effect from a standpoint, and that's the credit markets. But spilling over into currencies, I always like to take a look at like long-term charts. You can see kind of right here, maybe somewhere maybe in this area, we've had our first sort of level of support. But the big one is down here in terms of the breakout in this 2013 area from what was a monthly pennant or flag, wedge, whatever you essentially want to call a triangle we broke out from at this level. So a little bit of a longer term analysis may or may not apply to short term because this is a 5-minute chart on what's been going on. But notice we've been running in a pretty solid channel trending down. So even though this is only a 5-minute chart, so it's not like you can read the world into something like this, but I always like try to draw trend lines, channels, kind of see what's going on. Every time we've gotten near the top recently, in this particular case, see this hammer reversal candle. As soon as we broke trend, had a hammer reversal, boom, back down again. So you can kind of use this if you want to trade really short term, or essentially you're accepting trades on a much smaller time frame than a daily chart. So just keep in mind, if you do something like that in any of the softwares, you are increasing risk. And you're probably, with some folks that are new, why is that the case? It's just simply because patterns that any system globally would trade on any type of investment always have higher win rates, unless you got a superstar program, you're some great billion-dollar hedge fund, right? Always have higher win rates on higher time frames. Why? Because they're much more predictable patterns that show up on these charts. So just keep that in mind. If you ever drop down, which is fine, just understand the risk that you're taking on. All right, so take a look at GBP NZD. Sort of still stuck in the melees. We've had some crazy moves in this thing, I'll tell you. I mean, these moves right here. Let me move to the daily chart, actually. Actually, let me look at the weekly again. I mean, this move right here, that's the problem with trading this stuff. I mean, look at this move. This is just bananas. I mean, that's an account blower right there. It's just one reason I just don't trade this currency. Unless you had a program. I mean, I just would have a real problem dropping a martingale strategy on this currency pair, unless it has super, super tight parameters in terms of nowhere near the level of sequences that our current Einstein and Alexander have, and or tight stop losses, because this thing just could be a wild one. Now, just so you guys know, I'll go into some Q&A now, but I've gotten a lot of questions via email over the last couple of weeks. I was not trading last week because I just didn't like the volatility. Plus we broke through on the US dollar. Let me just jump back to the daily here. We broke through this, and there certainly was the potential that we could just waterfall down. Didn't think it was going to happen, but there's always the potential to essentially what is a real solid support line, right? And if we did in fact just waterfall down to this area, one, it'd be a hell of a move. Two, there would be a lot of martingale strategies, in my opinion. I don't care what algo it is in expert advisor EA land on the MT4 platform. I still think that they would be struggling, and they would have. This is really where you kind of want to have like But do understand this. It seems like I talk negative a lot about martingale. I really don't, because a lot of them will work very effective in periods of time like this, right? Because as we get stretched, right, peeking our heads above the trend line or going below, that's really where those types of strategies shine, because essentially they're putting on a number of levels or sequences, whatever you want to call it, of trades, and it's getting essentially bigger and bigger. And like right here as a short, that really would have benefited you because we were super stretched. Currencies for the most part are what's called mean reverting, meaning that they'll get stretched over a period of time. The more stretched they get within a tight range, the more a martingale system can work on something like this. It'll take a crack at it, hopefully mostly with the heavier trades right near the extreme points of the tight range you're in. And then as it snapbacks, those trades that were put on way up in an area like this, or way down somewhere in an area down here like this, are the ones that are such winners. They bring all the other ones out of drawdown, right? So essentially, that's just a brief discussion on mean reverting. Now, Elizabeth, I see you ask a lot of the same question, and this is like a crystal ball type of question you typically ask me. So now that we're back inside the range, I think you can accept all trades, right? Now, again, I could be wrong. So don't blame the messenger, right? But this is why learning technical analysis is important. And yes, I will take a look now at my favorite hated currency. Okay, so we had a couple of dojis, right? Remember, I alerted you guys to that over the weekend. So usually when you have dojis, it means indecision. It means that not necessarily we're going to reverse, but this particular currency is difficult to figure out because you first have to see what's going on with the dollar first. So it's almost like you have to dig through a number of trenches to figure out what's going to happen, because the euro is the secondary in terms of the most used currency globally besides the US dollar, right? And the yen arguably is, essentially third. But looking at that, you always want to know where the dollar is going first. If the dollar is in a real strength position, either up or down, it's going to drag everything else along with it. Anything else is going to benefit from it, like the euro has, certainly in the dollar's weakness. So as the euro lifts, right? So locks essentially a tertiary. This is probably confusing to understand, but that's why I always say just look at the dollar first and then move into the euro US dollar. I do not do a lot of trading this. I purposely stay away from deep technical analysis on this, but I think I've taught you guys enough that if you have the right charting system, you could sort of make your own assumptions as to whether you should or should not accept trades on this. So the question has been asked a lot, you guys. If you've watched David's presentation, he uses an Excel sheet to set up essentially the risk, and taking different examples of risk, hypotheticals, if you will. There are a lot of these spreadsheets floating around. We cannot, as a corporate entity, disclose that we will distribute that. I cannot put anything like that out. That is expressly against the rules of many countries' financial authority bodies. Okay, so just understand that. If you email me and ask me for it, I can't give it to you, but I promise you, you do a deep enough dive or try maybe contact David directly, you can do that. I don't know what David's email is, nor do I want you to ask me that. So yeah, I would think that if you are a fortuitous enough Forex trader, you can probably track the man down. He's not difficult to find. But if I give you his information, that's the same thing as me giving you the sheet. I do not know the answer to how high will the euro US dollar will go or when it will fall. I can only tell you what the technical chart patterns look like. Okay. Unfortunately, my crystal balls in the shop are getting repaired. I have negative profits in the much unit sells. Why the software keeps pushing those alerts after a pattern like this? So the question asks, I have negative profit on a bunch of Euro US dollar sellers. Why the software keep pushing? So the first question I would ask you, Marta, is do you have a MyFX book hooked up to your account? Demo or live? Should be both. Okay. Remember, you can always switch from a demo license to live and back and forth, and you can do all kinds of things. Another cool thing is we're going to have multiple licenses coming up. So if you guys bring in a bunch of people underneath you, even though I know, which is a great statistic, by the way, at Auvoria, very rare in the affiliate industry that like well over 70% of our subscriber base, they're just subscribers. They're not builders, right? They're not affiliates. But for those of you that fall in that category, all you guys have to do is bring in between 2 to 4 people. You get to get a bunch of licenses for free. So if I were you, especially in this big launch with Variable, especially those numbers look killer, it's not difficult at all. I mean, our team's brought in like 10 people just in the last week. Now we have some big builders on our team, but that's all you guys got to do. And you go out, you can get these licenses for free. And they can have one demo, you can have one live, 2 demos, switch it up, whatever you wish on however different pieces of software that you wish as well. I do factor in the credit markets into these moves. I just don't get in a lot to either the 30, 10, or 5-year note into the analysis because for now, I mean, if you guys truly want me to enter in, mostly the 10-year is what you want to be concerned with. It's not as much the 30-year, but the 10-year is what this country, in terms of the credit markets or the bond markets, fixed income essentially, it's what's a lot of things are pin actioned off that, especially mortgage rates. It's based mostly off the 10-year. If you want me to start analyzing the 10-year, I can do that as well because that kind of dovetails in with bonds or dollar. So whenever, again, I sound like a broken record in this, but whenever I get asked the question, hey, Steve, I'm in drawdown, what do I do? I always ask them, do they have the MyFX book? Have you analyzed it? What do the settings look like that you have, right? Have you taken a close look at that? Maybe you want to switch to David's settings, right? Maybe not. Maybe you like our high volatility settings. They've certainly done much better than other settings. Now, granted, there's always the individual that says, well, I have my own settings, and I've done very well and I've had very low drawdown. We've had a lot of those brought to us. The problem with those settings is they require a lot more maintenance. So typically the individual that's bringing those settings to us is an expert and or a pretty darn good manual trader. If in fact you fit that category, you can have whatever settings you want, right? Listen to my calls for just the macro overview of what's going on in the markets. Maybe you pick up a couple of nuggets on what's going on in monetary policy or money supply, right? Macro events. But hey, have at it. Don't let me hold you guys back. I know there's a fair amount of you out there, and all the more power to you. We have a number of Johnny Neutrons, as I like to say, out there as subscribers. But you guys have sort of an extra weight on your shoulders, in my opinion, because especially if you have a team, just like I've talked about a number of our leaders with teams, I think the onus really is, and the responsibility to you guys is to make sure your team's educated. Please do not have them trading some of these whacked out settings that I see you guys do, unless you all are monitoring it well. Because if another real exogenistic event shows its face again, or some country comes out, UK is an example. Oh, our Brexit negotiations they've stalled. You're gonna see just a way crazy move in the British pound, which is going to drag all kinds of currencies around with it. In which case, it will be top currency that's leading the world around in terms of Forex land, where the dollar is right now, right? So you always want to be prepared for those crazy events. I do think we're going to see another one of those coming up. I mean, it's just been a little too quiet, in my opinion. There's been way too many bankruptcies around the globe. There's been a lot of stimulus dropped on the markets. It's had a levitating effect on almost all asset classes, especially equities and some commodities. But we're starting to see cracks in that armor because in the end, monetary supply, or what I like to call the music on, is only going to sustain these markets for so long. As soon as the music turns off, everybody's looking for a chair. Risk happens real fast in this stuff. So, I mean, some of this is always an equity discussion with me, which I think is important because it can dovetail into what goes on in Forex. But right now, the world's looking at the dollar, looking at levels of debt countries are sustaining, especially the stuff we're bearing ourselves in. But even though that is, and a lot of people can't understand, well, why is our currency still with a pretty strong valuation? A lot of that just boils down to the lesser of two evils, folks, right? Just like politics, whether you're on the right or the left, right? There's crazy banana folks on both sides, but the choice in politics is always the lesser of two evils, just like in the markets. So that's a long answer to your question. I get it. But I think it's important to get down that path, a little diatribe there. But essentially just let the software do its work. We more than have proven over the course, and I'm not showing any FX books or anything today. You guys have seen all that stuff till we're all blue in the face. But the important thing is that all these accounts that we're in drawdown, if we just let them do their thing, yes, they've taken longer with our high volatility settings, but it has kept you safe. There is certainly an argument with David's settings that you can get more profit. But, with his settings, you don't have as many trades, right? Because you have a higher level range. In some cases, up almost 10 points from where we have it set. So you're taking less trades, but keeping yourself safer. That kind of answers some of your questions. But let the software play out, please. Do you have a photo of the percentage of win rate for each level of trade, 0 to 9? So historical win rates, Lewis, for Einstein and Alexander, if the software is operating correctly and not turned off and on, the historical win rates are right around 60%, which is exceptionally good. Doesn't mean your account can't get blown out, right? What if there's some sort of crazy event that takes place like we've seen a bunch of the last 9 months? So, but that's historically what the win rate is. Variable is higher. Main question that comes up for me is what's the recommended move you should set up your accounts to be able to withstand? Seems like 1,000. So the 1,000 pips, if you haven't, Rick, make sure you watch David's settings. He goes through all that. David's logic extent, especially the max number of levels based on super decision. When EJ did. So Jeanette, I don't know that I would have used David's logic on EJ. But there may be an argument for him. I haven't taken enough of a look on that, honestly. I'm kind of a dummy in that area. Hi, I have a customer who's not getting notifications. What would you suggest to help solve this problem? So Chaz, make sure he opens up a ticket with our Zendesk. So after you open up the ticket, you feel quite zen. Just kidding. Now have him to open up a ticket with the Zendesk. They're really good at that. If you're still having problems, you can ping me, and I can pick up the bad phone and call my guys, get it fixed. I had a starting lot size of 0.01, level range 21, range multiplier 1.15, position size 1.35, stop loss 250, trend level 400. What would you suggest change? So, Mart, I'm not sure if you've seen any of our presentations in the past, but those look like to me high volatility settings. The only difference from what we've done is we moved the stop loss to 500. Why? Because we saw that the vast majority of these trades, even though you were taking some big heat, right, down 250 pips, in some cases closer to 300, that was about it per currency, and then it came back. Took time. Arguably, we should add some better settings, but it withstood some pretty serious heat. And I've seen now almost 50 accounts, by the way. I've seen some of the FX books are starting to run together. That it took some time, but the drawdown came out. The cases took 2 months. What else? I love if you dive into bonds. Tell you what, I'll add the ZBs and the ZNs to the chart for next week. How's that sound? Take a look. I think I'll probably just start with the 10-year. So we'll have a little bit of a discussion. I mean, I try to keep it real brief because a lot of people are like, why don't you just talk about Forex? Because there's other stuff that's involved in Forex. Sometimes gold will have an effect on it. Sometimes oil, right? Oil's been dead. I mean, this is, I guess, a good thing, right? It's not going up and it's not going down a lot. I mean, it's been a totally, and this is because, you know, the world's sort of like on hold from a production standpoint changes, right? I mean, why mess with status quo, right? Look at gold. Again, still in a very levitated position that it has been, especially if you look over I'll start with the weekly chart first. You know, you have the gold bugs. You know, they're all out pumping. Your whole world should be invested in gold, right? Just like anything else, guys, you know, from a financial advisor standpoint, I don't care how much you love a particular asset. If you want me to be your financial advisor on the other side of this business, you have to have a diversified portfolio, plain and simple. Unless you come to me with $5 million in appreciated stock from Home Depot, which I have one client that does, his cost basis is basically zero. You want to have a diversified portfolio. Very, very important. And Forex is a part of that diversification. And by the way, Lindy, Vladden, Chaz, love you guys. Thanks for the questions in the future. Please put them in the Q&A window. When is Gearbox out? So, Lindy, I would probably take a look at both Variable and Gearbox. They are both scheduled to be released on the 17th. So let's all knock on wood, say a prayer that the developers can not run into any snags and get all this stuff done, right? That is our goal. So everybody is working towards that right now. And what I have told everybody, including my team, is go out and find a bunch of people to come in under you. You get 2 licenses for free. You can have both. Or you can start off in a demo on both and then move to a live with one, switch back to demo with the other. Cool thing is you can change the stuff up between demo and live. Don't feel pigeonholed to run out and go live. As I talk about in the demo video, which is one of our onboarding, the whole group they're going to be putting together for the onboarding, which is fabulous because I'll tell you, the vast majority of folks that you know, just didn't have the right understanding right up front, and they either didn't want to, didn't have the time, they were too lazy, you know, whatever the case was, they did not go through the education, and they just set up a live account, which is just absolutely the wrong thing to do. You know, it's like somebody throwing you in an F1 race car. You know, let's say your team, whoever, right? Team Mercedes, Team Ferrari, and they stuck you in a car, and you know the rest of the track's just ripping around these turns at 150, 200 miles an hour, and you're in with the team. You're gonna hit the first wall and kill yourself. So even though the software is good, if you're not paying attention to weekly calls and all that stuff, you're making it much more difficult for yourself. So as your risk manager, you guys are gonna hear me say that over and over and over again. Anyway, that's the story. So any other questions from anybody? How much you charge if you want to acquire your financial service? How much do you charge if you want to acquire your financial services in the future? Just curious. Minimum client size on the financial advisory side is $750 US. So you have to basically have $750,000 or more, in which case you can come aboard a client. We custody a TD Ameritrade. So, but that is for another day. So if you guys have any questions, you can always send me an email. Take a look at the chat window for those that have not emailed me yet. Make sure you please send me an email. It does need to include a MyFX link verified. I know that can be quite a challenge, so we appreciate if you do that. And trust me, your own risk management and trading plan system will thank you. But it is svetteral@auvoriaprime.com. Also send me a snapshot of the settings windows. But you guys are welcome to inquire on anything. We have seen a demo, launch, video, what have you will, of not only setting up the new softwares coming out. It's real quick, love it, very easy to understand how to set it up, and then how to manage it. So we have requested these videos be shot and produced and so forth by the actual developers, so that it's coming directly from them. And then you will just see me echo essentially the exact same thing that they tell us going forward, because a lot of them, not necessarily gearbox, but variable does not require anywhere near the intensity or the level of getting down into the weeds with the settings, right? And you're welcome to make the changes. But the important thing is that with some of our newer softwares coming out, some of them, there isn't really much to do with the software other than accept the notifications that it sends you if you're in the US, right? And the other cool thing is with those notifications that they'll be sending you that you need to manually approve, it is not going to require as much of the detail of in the weeds, right? So you can just accept them, which is cool. But as I say that, I think a lot of people will hear, well, it's just let's not pay attention to it anymore. Not good. There's going to be some weeks that regardless of how good the software is, it is too bananas out there, turn it off, right? Got to be plugged in to find that out. And I will try and get some clarification from the developers on, what week, if any, they would turn it off. And I can tell you with some of the software coming out, it has run for the whole last year through all kinds of events. And even some of the worst drawdowns we saw without even messing with anything, you got to select the right currencies, obviously, and get it running on the right group. Some of them will help you with that as far as the currency pairs to run on. But the cool thing is sort of like let your heart not be troubled. It's doing more of the work for you. I still think it's important from a trade plan and a risk management standpoint, though, to always pay attention. And you can always just watch the first 15 minutes of my calls, because I try to get the important stuff right out front, and then maybe I'll run off on a tangent for the next 20 as I am today. But you can always watch the recordings of my calls and or see the notes and so forth. Right. Yeah, look at that. Well, thank you guys. Look at all these nice comments coming into the Q&A. All right, cool. Thank you. All right, everybody, enjoy. Have a safe week. Let your heart not be troubled. Spread the word of Auvoria. I'm starting to sound like an affiliate guy, right? Maybe I drank the Kool-Aid too. But everybody have a safe week. And if you got any questions on anything, we are here to help. Forgetting you got any problems with any of this stuff, the guys in the Zen desk are really good. Enjoy.